Monthly dividend payments are like monthly checks that you can use to pay your bills, your rent, your mortgage, buy groceries, pay for your travel, buy coffee, gym membership, or anything that you can think of. Investors also find monthly dividends attractive because they can compound faster if they are reinvested. This video will talk about 39 Canadian securities which are traded in the Toronto Stock Exchange with an annual dividend yield of over 5% and also pays monthly. That's the key thing, pays monthly. I have not considered the ones which are only paying quarterly. Watch this video till the end, as I have provided names of 4 safe and reliable ETFs that you can use instead of doing research and buying stocks. Hello, welcome back. If you're new to my channel, my name is David-TO. I'm a retired engineer and you're watching my YouTube channel, Think and Retire. In this channel, I talk about building wealth and income from the stock market. If you find value in this video, please like and share. And if you have not subscribed to my channel yet, please do so and press the bell icon so you're notified whenever I upload new videos. Please keep in mind that this video is for educational purposes only. This is not a recommendation to buy or sell any securities. Please do your own research before investing. In this particular video, you will find there are a lot of low-priced, low market cap stocks which may not be as liquid as you prefer. Please do your own research and make sure you're comfortable before you put your own hard-earned money. I normally try to buy stocks which are only above $5. Again, that's my personal opinion. Please make your own decision based on your risk level. Why waste valuable time with stocks that only pay quarterly? Get cash in your hands more quickly, in this case monthly, so you can put them into work so that it can grow faster with compounding if they are invested properly. I like the term triple play advantage when it comes to monthly dividend payers. Number one, it has that ability to pay for your retirement expenses or living expenses. Number two, monthly dividend payers have generally higher yields than the quarterly dividend payers. But again, there is a risk with monthly dividend payers, so make sure that you do proper research and you're comfortable before investing. And number three, as I mentioned before, you have the compounding edge over time. Initially, I screened for stocks in the Toronto Stock Exchange with the annual dividend yield of over 5%, and they are paying monthly. And I found over 80 stocks. Then I filtered them further to make sure that the payout ratio is less than 100%, the price to book ratio is less than 3, and also the market cap is over $100 million. And with that exercise, I found about 39 securities which meet their criteria. These 39 stocks came from about 13 industries. Asset management had about 10 stocks. The oil and gas exploration and production has about 7 stocks. There are a lot of REITs, which is the real estate investment trust, and there are many more. The good thing about REIT is that in the last 5 years, the real estate has been the worst performing sector in the US. In the last 3 months, though, is the best performing sector. And with the Feds expected to reduce the interest rates, I am hopeful that the REITs will perform better in the very near future. So let's get into the list that I have prepared. This is the spreadsheet I created on Google Sheets. It has a listing of all the 39 stocks that I mentioned before. Basically, they are screened for market cap of over $100 million, annual dividend yield of over 5%, payout ratio below 100%, price to book value less than 3, and they are paying monthly, and these are traded in the Toronto Stock Exchange. Currently, it is all sorted by market cap. You can actually sort them by P ratio, by the pricing. So anyway, this is pretty user-friendly in my opinion, and if you press any one of these symbols, it will actually take you to the Yahoo Finance website. I'm not going through the whole list here. There are a few things that I want to mention to you. There are some of these securities have been paying or increasing their dividends for over 5 years. For example, the CT Real Estate Investment Trust, this is part of Canadian Tire. If you look at EIT-UN.TO, it has been paying 10 cents a month distribution since August 31st, 2009. That's about for 15 years they have been paying the same dividend. But the good thing is the price have been appreciating since then, which is pretty good. If you look at the next security, which is the Allied Properties Real Estate Investment Trust, it has been increasing the dividends for over 3 years, so that's good news. And also there is a AD-UN.TO. They have been paying more than 4 consecutive years of dividend growth. There are a few restaurants in this list, for example A&W, then you have the Pizza, then you have the Keg Royalty Income Fund, and then there is another restaurant. They have few brand names, which is the Sir Royalty Income Fund. You can pause the video and take a snapshot, or if you're interested to get a copy of this spreadsheet, you can write in the comment section below and I will get back to you. There are many REITs of the real estate investment trusts in this list. The good thing is, with the Feds about to cut their interest rates, I am hoping that the REITs will perform better in the very near future. Now I'm going to talk about those 4 bonus ETFs that I talked about. Number 1 on my list is XEI.TO, which is the iShares S&P TSX Composite High Dividend Index ETF. It has a net assets of $1.63 billion. The yield is about 5.20%. It has a MER, which is the management expense ratio, of about 0.22. It is basically designed for long-term capital growth and it pays monthly. Number 2 is VDY.TO. The asset under management is $2.76 billion. The yield is 4.56%. MER, which is the management expense ratio, is 0.22 and it pays monthly. It's called the Vanguard FTSE Canadian High Dividend Yield Index ETF. Number 3 is FIE.TO, which is the iShares Canadian Financial Monthly Income ETF. The net asset under management is $1.02 billion. The yield is 6.45% and the management expense ratio is a bit high, 0.80%. And the 4th one is XDV.TO, which is the iShares Canadian Select Dividend Index ETF. The assets is $1.6 billion. The yield is 4.82% and the management expense ratio is 0.55%. It pays monthly and it basically includes the 30 highest yield Canadian companies in the Dow Jones Canada Total Market Index, and it's totally rules based. It has dividend growth, yield and the payout ratio. If you find any value in this video, please like and share, and if you are not subscribed to my channel yet, please do so and press the bell icon so you're notified whenever I upload new videos. Thank you very much for watching and I will see you next time, and happy investing.